Hey guys, Mike here. So, boy, what another roller coaster day, and I mean a roller coaster day, boy. Gave back all those gains out of the gate, but don't worry, somebody came and saved the day at 12.18 and helped punt the market back up. So you don't have to worry about that one. And it's getting pretty crazy. I was telling members in the video, I'm like, you just got to be listening to these press conferences, and immediately as soon as they mention a stock, just go buy the calls, or if it's bad news, just buy the puts, and that's gonna make you enough money to send your kid to college or something. I mean, it's kind of getting to that point, and especially when it comes to tariffs and things like that. So, and I'll point out something in this video, reason why everybody's talking so loudly, and literally, I've never seen press conferences where they're actually asking the Treasury Secretary, the Secretary of Commerce, the President, like, are y'all doing insider trading up here? And I'll show you why. And let me be very clear about this. This happens in every White House. It happens in the Senate. But imagine this. Here's what's happening. I have no doubt in my mind what's happening. Imagine being an aide, right? These aides up there, you got to understand. This ain't the poor boy off the farm getting that job. The aides who, of course, do all the legwork or whatever, and they're in the shadows. They're always in the rooms, though, right? You just don't see them. You never see them on camera. And usually their mother, father, uncle, somebody's a bigwig. That's how they get these jobs, okay? Because these aides go on to be, work for senators and representatives and high-end, jobs, making a lot of money. They go on to being lobbyists. That's a big one. Or they run for office themselves. Okay, that's usually what happens with a lot of these people and stuff. But they're younger, So imagine sitting in an office, whether it's the Oval Office, whether it's Lutnick's office, the Treasury Secretary, wherever, and you hear them say Friday, "Yeah, I think we'll issue a statement tonight. Go ahead and we'll give a reprieve on tariffs for iPhones, computers, and semiconductors." Imagine hearing that, and you're like, "Wait a minute, did I just hear the golden ticket? Like, is that a lottery ticket right there?" And not wanting to step out on your phone and start buying calls, or texting your friends, or calling your mom and dad, or your uncle who works at the hedge fund, or whatever, and you'll see what I'm talking about. I mean, it's obviously was happening, but it's just funny to see it now, okay? And so we'll look at that. We'll go into the video with where Jim Carson thinks this rally is going, and probably much higher than what you actually think it is, and what he, of course, sees coming down the pipe, as well as we'll get into the charts and stuff. And there's one stock I'm going to quiz you. Why is this stock up 20-some% today? You better know. You ought to know. But to start off with the funny, I didn't have to have a meme today. The Ohio State football team was there today, and they're so shady, man. Breaking the trophy. Thank God he dropped the cheapest part of the trophy, and they watch them. They're like, "Yeah, let's just put this down." I guess that thing must be super wobbly, but yeah, I guess you don't want to be that guy right there. But here is Friday. You can see this right here. 800,000 SPY. 1 DTE calls were placed, and they were placed 2 minutes and 6 seconds before the close. And then, of course, if you can't see that time right there, you can see it better here at the top. 3:57 and 54 seconds p.m. expiring today, which is why you saw they held the run up. Everybody dumped the calls that opened like crazy. And plus, here's all the Friday Apple stuff. I mean, Apple calls rolling in, major sweeps rolling in for the 195, 200 calls right there. And they were selling the heck out of the puts. And you saw Apple up 6% right out of the gate, right? And if you don't think for a second that these high-end, powerful CEOs don't have all the president's numbers, all the bigwigs up there, what'd you hear President Trump say today at 12:18? Wink.
I speak to Tim Cook. I helped Tim Cook recently, and that whole business. Yeah.
And also, he announced the tariffs for the car companies. He's probably going to do something to help them out, give them time to work. And you saw Ford, GM, and a whole bunch of them 5-6% pop in a matter of minutes, baby. That's why you just got to listen to see what they're going to say. So if they say, "We're slamming those auto manufacturers with more tariffs," well, you might want to buy some puts, okay? But it's a powerful thing to see that. But here, real quick, before we get in the charts, is Jim Carson talking about what he believes is going to happen in this rally right here, how high we're going to go, and then what to be, basically bracing for here.
We think that will likely still happen, but not to the highs. We think that range of the rally back is likely to be significantly lower now. Meaning instead of 5,800 to 6,200, 5,650 to 6,000. We are optimistic that it will still play out, but there are a lot of other factors at play now. That said, I think you know this, Adam, I've been calling for this year 35 to 45% decline, peak to trough, and I've done that publicly for 3-4 months at least. We believe that is not, again, going to happen on this first move. We believe that this is the end of chapter 1. 4 or 5 chapters. And that this is going to be a process, a move that is much more akin for those who have been in recent history, although a very different move in macro ways. Something much more akin to a tech bubble plus a great financial crisis kind of 1 year plus type move. We don't think it'll cut as deep. Again, 35 to 45% is not the 50 to 75% right type things we saw in those markets, depending on the markets you're looking at. But still, in some ways, more painful because relative to what we believe will be sticky interest rates and the long bond and eventually higher bond yields, which we've called for at the same time, a very stagflationary environment, very different than the last two, the Federal Reserve will be neutered during this time and unable to really assist. And in real, again, relative to the costs that the tape or the thinking of valuations of the market will actually be worse than what we saw in those other periods. Because of and portfolios will be less cushioned by the bond part of their portfolio.
And to be honest with you, if we get back to all-time highs with the decreased amount of liquidity we have, it would be pretty freaking amazing, right? Because I mean, you got to think about what's been going on. You have the Fed is not cutting like they thought they would. They were cutting there in like December and all those months and be, oh yeah, we're going to keep cutting, and they stopped, right? They have decreased the roll off the balance sheet, but it's still rolling off. Now you got obviously stuff going on with the 10-year yield and 30-year yield are way up here now, okay? Which means borrowing costs have spiked all the way back up here, okay? So that's not a good thing. Us refining our debt, us, supposedly cutting government spending, firing people at the government level, which means they ain't got paychecks or whatever. And then there's other things happening, like, Japan's been raising rates, so the carry trade's kind of out the door. Maybe they're still borrowing money from Japan, still buying stocks, but not as much because it was 0%. Now, I forgot what is it, 1.25, 1.5. They may be cutting now because their economy's a mess. And so all these different things, plus like this April, I mean, are you paying in or are you getting something back? Because all the reports I'm reading are more people are paying in to the government than actually getting refunds back. So that should be less money also going in as well. So there's all these different forms of liquidity, that aren't there that were supporting the market for quite a while. Okay. And so if we get back to all-time highs, it would be freaking an amazing thing to see. That is for sure. And plus, as you've seen, what the 10-year and 30-year bond auction show us, because the yield spiked, countries around the world and everybody else was flowing in trying to get those 30 years, especially the 30-year. I mean, it was I think it was the second best 30-year bond auction ever, because rarely is a 30 you're going to be able to grab that for 5%. Okay, and so they were flooding that, trying to get that down. Now, most people aren't going to do that, right? Because if you're putting in $500, that's nothing on 5%. You're putting in, 10 million, 20 million, 30 million, whatever it is. 5% is a lot. Okay, so just kind of keep that in mind. So it's like all this different stuff going on. So we'll see if he's right. And the good thing is, I mean, I give him respect no matter what happens, because he even admitted, he goes, we were wrong on this rally. They didn't think they would drop 22%. They thought they'd go down to 15 and then get a counter rally. And that's the only part so far they've been wrong on for the last year and a half now. And so we'll see if he's right on this or not, but give him credit for he's putting it out there. And that whole, remember when he's talking about 35, 40%, whatever it is, that's from already at the top in February. So measure that out and kind of give you an idea. Now, do we get there? Remember, you can't usually get down that far, by the way, without a recession. If you go back and look at any other time, without a recession, you're talking about 20, 25, 28, something like that. But to get down in the 40s, like especially go that far, I think every other time, if I'm not mistaken, needed a recession. So correct me if I'm wrong on that, but I believe that is the case. And so now, of course, what you're going to hear, it's all over Twitter and everything. We've been talking about this for a while. Officially, really, did we get a death cross? And the 50 is there on it. I mean, you could start to see it turn back up, but it looks like it's a death cross, right? So we're just going to say yes on this. And so what does that mean? Well, as I've showed you before, it doesn't mean the market's all of a sudden just going to crash and burn. All you got to do is go back and look at the other time. And I told you, look what happened in 2022. When you got the death cross, we ended up having an enormous rally on literally like the week it happened, okay? And you'll see this. It goes back and forth depending on obviously what happens. So, if you look at that one, there's a death cross 2022, and what happened? On that day, 12% rally started. Okay, right, you got above the 200. 2008, 2020 was so short, it was only 30 days. That was basically the bottom. because it was such a short one, right? 2018, we cratered, but we were up against what? The 250. We were challenging the moving averages would have happened. We're like 6% off on these moving averages. And so you can keep going back and just looking at all these. I mean, who knows? Maybe that 2015, 16, maybe that's what we're in now. We'll have to see, because we got the death cross. It rallied up and, came back down, came back up to it. So that was a mess. But the point I want you to get is it doesn't mean all of a sudden it's going to fall off a cliff just because the 50 crosses 200. Is it good? Nope. It is not a good thing, obviously. As you can see there, we dropped in 2008, I believe it was. But just want to make sure you understand, as I was telling my neighbor, hey, we ain't had death cross yet. Well, of course, we did have death cross. So on the Qs is a little bit more pronounced. But going back to the SPX chart, you can see, what are we doing? We're kind of just trying to build out some kind of market structure, right? Trying to set some higher lows, trying to get a higher high if you can. Got, rejected that 0.5 fib, obviously. But what are we above? Above the 5-day moving average. It's curling up right here, as you can see. Got a whole boatload of moving averages coming up here to try to get through the 21 SMA. Got your 300 moving average. Got that trend line. I mean, you got all kinds of stuff, right? And so, again, what's been, the volatility has been huge. The swings have been enormous still. And it's crazy. I don't know about you, but I'm sitting there going, oh, we're only down 1%? Or something, or oh, we're up 1%. Really, that's it? Like, that's kind of when you get in this huge volatility range. It's like, that's it. That's kind of, where's my 5% day? Where's my 7% day? Right? And so we got a lot of stuff coming up. If we can get through it, I'm watching the 0.5 fib and the 21 SMA to see if we can get through that first, or we need a pullback first, right? The Qs will test a lot of these before that. Okay, the Qs. If we end up going to the daily, you can see that one hadn't even touched the 0.5 fib yet, as you can see right here. And when we come up and look at the daily, you can see obviously above the 5-day moving average, hadn't touched the internet anchor VWAP, but it's going to test it before any of that. You can see that death cross a little bit more pronounced again, when you're looking at it and stuff. But it'll most likely test a lot of the stuff before the S&P is going to test it most likely, if the MAC 7, MAC 8 can actually get its butt going. But you can see in the SPX, we're kind of in this triangle, right? So the question is, are we going to come up, ricochet off the 300 moving average? Also comes in conjunction with that descending trend line and start wedging right there in that triangle, waiting for a breakout. That's going to be the big question. Now, of course, what's going to solve a lot of this is going to be the VIX. Does it continue to come down? It came down. I normally don't map the VIX out like this, but I don't know, it seems to be working lately, so I guess I'll give it a shot. But there's the previous hour right there. Got to bounce off that. We marked out some fair value gaps last time, and it worked on this. It left a gap above. And I know one thing happened. There was a huge order for the VIX calls. I don't know, I forgot if they were 40 or 50 strike or whatever, but that can be a hedge also. And so we're going to see, obviously, if that's the case or not. It's hard to think that, like, all of a sudden volatility would just completely drop off a cliff. And, again, a lot of people are calling for this thing to stay elevated. But if it can fall below 30, start getting in the 20s, that helps out with rallies for sure. I mean, no doubt about it. And also what helps out is, I talked about the 10-year, 30-year, right? Coming into historic resistance. Finally got a 1-day red. That's nice to see. US 30-year hitting that 5%. That is so rare when you come across here. It's only happened a couple of different times before you have to go all the way back to 07. And so you notice when it hits up in that area, you usually get reprieves. All right. So, and the way to know this, if the bond market's finally calmed down, remember, this is the fastest move up since 1982. So it's been a long time. But if you start seeing people roll up into the bonds, and finally it starts to settle down some, the stock market at least it gets in a range, at least starts kind of setting the footing and stops these crazy swings you're seeing, then that lets you know the bond market probably is starting to settle down some. The Fed is stepping in behind closed doors and trying to do this. We'll hear from Jerome Powell at some point in time this week. I'm sure he'll get asked about that for sure. But, no surprise there at all. But again, if big money's flowing into bonds, most likely probably not flowing into stocks, or at least not the kind of stocks you're thinking about, like risk-on stocks, more or less stocks like this. I mean, so, the MAG 7, half of them were red again, but these were green like all day long. And so I'm watching them. Amazing to me, if you compare our MAG 7, 8 to the Chinese stocks are way up today than our other ones were. So people are still buying those Chinese stocks, even though we have a risk of being delisted, I think, for really the first time ever. They're really looking at right now. Now, looking at like Hood, for example, I think this shaded area where you got the daily fair value, you got the 50 moving average, this continues to move up. We said if it broke that trend line, that's where it's probably going. We'll see if that's going to be the case tomorrow. I think it'll be a good rejection point if it can get up there. Tesla, interestingly here, that's another death cross right there. But look at that price, man. The reason why it keeps hovering around this price, This is a very, very important price. You can see right there with the volume range, volume profile right there. So you just keep balancing. It comes a little bit below it, a little bit above it, just ranging like between like 40, 62, somewhere in there. As you can see, I mean 240, 262, whatever it is. But you know, that there's a reason for that, because if it starts breaking down again, especially if it breaks that 0.79 then it's going a whole lot lower. And what's interesting is they got earnings next week. So, you know, that's going to be fun, because you can't imagine. I mean, I don't know any good news coming out for Tesla. Maybe if Elon said he's leaving the White House for good and coming back now, you know, you can see the stock get a bump for sure. But it's kind of in these weird ranges right now where, okay, is X going to mark the spot and it's going to break out above that and test the 51st and the 200, or is it going to get rejected here again like it did this morning, start heading back down towards that 220-ish type area before earnings? So, you know, they usually, I have to go back and look like what they like to do with Tesla. I'm trying to think if they like to run it up before earnings or run it down. Some stocks love to get ran up before earnings, but I mean, boy, I can't imagine. It's going to be, to me, it got to be the worst earnings we've ever seen, right? I mean, with all these boycotts and everything that's going on and what China's doing, and the European Union talking about not having any tariffs on Chinese EVs coming into Europe. So we'll see. Now, then there's Apple, of course. I mean, just a gigantic move up off the bottom. Huge. I mean, for Apple to move 6% in a day, which you gave, you know, most of that back, but still, that's unbelievable. I mean, those call options were just crushing it today. And you can see up above, still got a gap up above right there, as you can see. So the question is, are we going to come up or come down actually tomorrow? Then come up, fill the gap, maybe get rejected to 50, start coming back down. That's what everybody's really trying to figure out, because everybody and their mother is calling for this thing to try to challenge the low again. But when everybody calls for that, that's when it usually tricks you. Now, MP Materials. Do you know why MP Materials is up 28% in one day, and why it has held up so well through this sell-off? I mean, this thing is actually up since the market crash. MP Materials, even before that, was actually green. So it has held up really well. Anybody know why? Because it is a SPAC, SPAC, that came out. Remember when SPAC, the SPACs were like popular coming out? It runs the only mine we have in the United States of rare earth minerals. They're not rare, by the way. I don't know why they call them that, but still, they're very important minerals, let's say that. Now, of course, what just happened? China, in retaliation again, reported this weekend, they were already limiting what they were going to send us. Now they're going to go ahead and just like almost fully restrict rare earth mineral shipments to the United States. What I don't know is MP Materials cannot refine what they mine. They have to guess where they send it. You ready for this? China. China actually refines like 80% of the entire Earth's rare earth minerals. Why? Because a lot of it's radioactive. Okay, it has lead in it, arsenic, all kinds of stuff. It's a terrible job to have. Okay, and so if we ever do build one here, you will get a very high-paying job, but you might get cancer. I mean, it's my job. You couldn't pay me enough to do. I don't care what kind they try to pay me to go do that job. And so, and especially, you know, if China's the only country that really does it. I mean, the Philippines, I think they do it now. I think Australia is trying to build one. Yeah, so we'll see how that goes. But, you know, talking about national security, maybe we need to find a place where we can refine our stuff. But we only have one mine. So when they restricted that this weekend, bam, boop, boop, see you later. We'll see if it keeps going up. But it's amazing how well that stock has held up through this whole thing. Okay, because and even President Trump said this, and I agree with him back in his first term. He said, this is a national security issue. And I said, yes, it is. Because for those who don't know, those minerals are used in everything from, I think I put it in the morning news brief, defense systems, used to make the magnets that go in all kinds of different stuff. So electronics, semiconductors, you name it. So they're very important. And to have one country which you're at war with, basically, economically, that is, have so much control of it is ludicrous. But that's how our government rolls. So there we are. So that's why it's up. So keep it on your radar. Keep it on your radar for sure. I mean, it is an important company. It's an important mine if we're talking about national security as well. So, and if you're talking about increasing defense spending up to over $1 trillion, what they're trying to get out of that ground might be pretty dang important, I would think. So you think they get some really big contracts. So anyway, let me know what you think about that. Now, when it comes to earnings, again, I think every day has really big earnings. We'll have Bank of America, Citi, Johnson & Johnson, PNC, Albertsons, United, which is going to be a big one right there, as well as the data. You're going to be looking at nothing to worry about at all. As you can see, Empire State Manufacturing is not red folder, but, you know, we'll look at it anyway. Import prices, I guess I've never even tracked that before, but now all of a sudden I'll be like, why not? I guess that might be important. So, but no big red folder news until Wednesday. So anyway, buckle up for another fun one tomorrow. We'll see if we're going to start ranging out, just kind of bouncing back and forth, or continue to move up. Let me know what you think in the bottom, what your prediction is. So think about hitting that like and subscribe button on your way out. Appreciate all you guys who've been watching the videos. Think about signing up for the membership, less than the McDonald's combo, and I'll see you guys tomorrow.